4-day losing streak on the S&P. Volume kind of declining on it. Mid-month seasonality, setting up a little bullish. Did we miss a chance to buy the dip for the Santa Claus rally? China, they're talking about easing restrictions again, so that's helping the market out a little bit, but we've heard that tune before. We got to discuss the rate, not the rating of the day, not the rating of the month, not the rating of the year, but maybe the rating of the decade in Bilibili. Price target 250. Can you believe that? We got some news on ExxonMobil, Chevron, and then we have Marc Chaikin of Chaikin Analytics with his second to last appearance on the show this year. Mitch, let's give the people what they want.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. We're going to talk the December contract, even though the March is the front month contract. I'll talk about that when Dennis comes on. We're ripping. We're up 15 and a half handles at 39.52 and a quarter. Nice overnight range. Can we take out that high from yesterday at 61.50? The buck up 9 cents, 105.14. Not a big move there. TLT. Let's talk about that rally in that TLT when Triple D comes on. It's flat today at 109.47, but what a rally. Crude getting a rebound, a much needed rebound, up 247 at 74.48. Gold flat, 17.98. Silver up, not even a penny, 22.92 and a half. And Bitcoin, we're going to talk about Bitcoin here because it's just, well, I guess we don't need to talk about it because it's not moving. Let's bring in Triple D and Mitch. How you guys doing? Dennis, how you feeling? How's that tooth
The
feeling?
root canal's okay. I feel like I'm getting another cold. Back to back to back to back to back to back infections, or it's just long COVID that just goes in waves. But the root canal went all right. It was a little bit challenging because I had jaw surgery 20 years ago, and there's a little screw in my chin. There's 2 screws that kind of hold my jaw, and he was trying to obviously go down and dig out the root, and he's like, well, I can't go too low. I had that screw.
What
so
happened
like,
to the
fine.
jaw? Did you
was
get like a cartoon?
stuff.
Did you
No,
see
it
a
was
big stock
orthodontics.
and like, the jaw dropped, that kind of thing,
I'd like to have a good story with it, but it was just when I had braces and orthodontic stuff. So it's probably
Man, I thought it was a good stock story.
Long time ago.
Hey, thanks for sending me that picture with the screw.
I know.
I really appreciate that.
It was crazy because they're digging down and the screws right there, and he's like taking an X-ray, and he's like, I can go a little bit more. I can go a little bit more. He's trying to go as far as he possibly could without
How about we
touching
don't?
the bloody screw. Then he hits the screw off, and then my jaw falls off.
Exactly. How about we don't go further, please?
It wouldn't be good. So, anyways, I feel okay that way. But again, like I said, I don't know why. I'm sneezing. I'm blowing my nose. I obviously have another cold, or it's just the next wave of COVID.
Can I show the screw, Dennis?
They didn't tell you with COVID, Mitch. They didn't tell you when they were doing
really
the waves.
the
waves. Oh, you're trying to show it. I don't know if you can get it.
Here,
show
I
it.
could put you full screen, maybe.
No, you ain't gonna see it like that.
I see that root though.
The root's there.
Root.
I'm going into the screw. I can tweet the picture if you want to see the picture. But yeah, they didn't tell you with the waves, Mitch, and the COVID that once you get the first wave, you never get rid of it. So you just keep getting the waves of infection, just keep going through your body and never goes away.
It's like
that's how I feel.
Cryptocurrency,
Anyways,
you just gotta wait through the winter.
They tell me just go to Florida. Just turn around and go to Florida, and then the sunshine will get rid of it. That's what my friends are telling me.
There you go. Go burn it out.
Get away from this, get away from, this northern Georgian Bay, snow in November, and get down to Florida, and everything will be better. Maybe that's the case.
We got to get you out the ice box, and we'll bring you over here to the sunshine. No worries.
Maybe. Even go to Detroit, it'd be better. So
All right, let's get towards the stock action. Overall
yeah,
price action from yesterday.
yeah.
I wasn't able to focus too much. I was lost in the Benzinga future of crypto life. But what did you see out there?
Yesterday's price action.
Yes.
Yeah.
More of the same. A lot of nervousness. I mean, it was a quiet day compared to the day before. S&P did
Mm-hmm.
not breach its previous low. At least the SPY did not. A little
Mhm.
pesky little double bottom, you could call it.
Yep.
91.64, 91.97. So that's the good news. And we bounced out of there a little bit here. And we've, sold off a good 100 handles in 3 days. So, I mean, we could be due for a little bit of a bounce here. But again, I think he's got to fade everything. So it's just a market where you get the big move, and unless it's Bilibili, which just continues to run, which we'll talk about in a second, it seems like everything is just a fade.
Rollover price action. They did this to me again. You have the quad witch next Friday, right? The third Friday of the month.
Yeah.
So the way it typically works out is they roll over the contract the second Wednesday of the month, right? But not when you have a month that ends on 30, right? November 30th. So basically, what you're looking at right now, and I'm going to talk D's for the rest of the week, but March is the front contract. So during the rollover, I've explained this before. If you have a long position in the D's, you got to sell the D's and buy the March and vice versa. And there's still good volume, but the volume shifts over to the contract. And what it does is it creates these pockets, where some people actually try and do the spread, some people try and lag the spread. And it was heavily traded back on the floor. I mean, there were some guys, I think his name was Howard Siegel, EGLE. He would only show up to trade the rollover and to trade
Really?
those spreads. Yeah. So it creates some choppy price action. And that's what you saw yesterday. And we did at the close on premarketprep.com yesterday. And you looked at a lot of the charts that our chat was great. And they were just putting in a low above a low. Not as low as like you really want to, like, oh, I'm really going to buy the dip on this one, but just a higher low. And they were protecting that low. And you're thinking, yeah, maybe you're not going to take out that low from Tuesday. And things kind of look kind of bullish for a lot of stocks. I think maybe AMD was one of them. If we take a look at that, a nice higher matching low in AMD. Now that's trading up not much. I think another one was NVIDIA. That did a lower low, but recovered. So that's what the market looked like. We're up today. This is the first day trade in the March contract, and that's
Yeah, sure.
H. So I think they're comping for a little bit of the choppy price action.
I think it's just uncertainty too. You've got a real battle, like I said, the big battle between the bulls and the bears. It's like really, that we know what the bear case is. It's that, interest rates, recession's coming. It's what I've been preaching here. But the bulls have the case that, hey, stocks are really beat up. A lot of this bad news is priced in. And if all of a sudden we start to get inflation in check, the market's going to applaud that. And then you have the seasonality factors too. So it's still the big battle. And I don't know who wins in the short term. I think in the long term, stocks go lower. Which is probably counter to what a lot of people say in the long term. They say, oh, stocks always go higher. Well, my long term is a year from now, and I think they're going to be lower. I think it's going to be a very ugly 2023 for stocks, but doesn't say that, you can't get this seasonality run. So I'm very cautious shorting the market here because you're still setting up, and people say, oh, there's no seasonality. You sold off 100 points last week. Well, now you set up even better for seasonality because you've come down. So you're not overbought anymore. So all it takes is one CPI data point. They will rip that to 420. But again, I don't know what the CPI data is going to be. If it comes in hot, Katie bar the door, we go back down to the lows. So we're very dependent on the tape bomb that is coming next week.
Yeah, Marc's going to come on in a few minutes and discuss that. I just look at it just like the market dynamics from last week. There were
Yeah.
just no buyers at 4,100. There were people that were trying to get out of year-end stuff. There were people that had a nice trade in the 600 move in the S&P, 600 handle move, and it was just like a buyer strike. Like, I'm not buying up here. I'm selling. And you kind of felt that with the market. And then was this a big enough dip to buy for a year-end rally? That remains to be seen. But China's helping us out today, huh,
China
Mitch?
is always helping, it seems
Definitely,
like lately.
it doesn't want to get At least, I mean, if you're looking for areas that have been strong lately, it's definitely in the China stocks. We're going to go ahead and we can go to Bilibili,
Sure.
because there is a great rating that Dennis wanted to bring up.
Well,
It definitely caught
and
him
I've
like
read the fine
cartoon.
print here, so just to clarify, I did screw up when I originally said, "Oh my goodness, they put a $250 price target on."
All right, perfect. It wasn't me that couldn't find it.
Hong Kong dollars. No, you can find it. They had a price. You got to read the fine print.
You got the good old currency.
So I had to do the conversion.
Trick.
That's a $32 price target. So nobody else did the conversion. The bots didn't do the conversion either because they're buying it up 10%. They're like, oh my gosh, I put a $250 price target on $23 stock. Not so fast, bots. Algos, read the fine print. It's in local currency. It's not in US dollars. So
you know what I call that?
$32, I believe, is the equivalent.
I call that Hong Kong Fooey.
Hong Kong Fooey.
Do you remember that? Mitch, no. I know you don't remember that.
I know Chop Suey at least.
No,
Chop Suey.
Dennis, you remember Hong Kong Fooey?
No, I don't know.
You don't remember that cartoon?
No, Joel. You're talking back from the 19th century again.
Was it black and white, Joel? That's all I got to ask.
It was before color TV, for sure.
Come on, Chad, help me out. Don't leave me hanging. Come on, easy Mike, brother. And come on, help me out.
It's not only Bilibili, right? It's a lot of the stocks. I mean, look where Baba is, $91.
Well, here you go. The dip yesterday. We get one dip for 1 day in China, and they buy it right back up. So Baba dips down, awful day, down $4 there, and they buy it right back up. Billy, they bought up yesterday. Starting to make new highs. Maybe somebody knew this analyst was coming out. Boom. You get it again here. Baidu, BIDU, same story. Dips for a day, right back up to the 120 resistance. We'll see what happens. But these China stocks are so beat up. And they are, if you believe the numbers, these things are cheap, even relative to the market. So the PEs on these things are fairly low. Did we ever do the PE on Baba? We ever get the PE on Baba?
Yeah, I'll take a look
it's the gap accounting versus China accounting, but it just say other things being equal. If we really believe the numbers, what's the PE on
forward
Baba?
Outlook at 9.5?
9 times earnings. I mean, these are the kind of stocks they're buying. I think it's pretty safe to say Baba hit almost an all-time low. Is that not incredible, Joel? The way this stock has grown earnings. Back in 2016, this was $55 and went to $300 in the tech bubble of 2020, which we'll call it the official tech bubble that took out the tech bubble of 2001. In the tech bubble of 2020, it hit $319, and it went full circle and went all the way back down to retest an all-time low. The all-time low, if you go back to the IPO, was 57.20, and we recently got to 58.01, and it held. So that's the good news. And also the good news is the PE is low. Always potential tape bombs coming out of China. Always potential that maybe the numbers aren't as good as they appear to be because it doesn't have gap accounting. But with that being said, people just taking it at face value, PE at 9, company's growing a long ways. I get why people are buying the stock.
They walked it down. I mean, China walked it down. It was over 300. And I know that there was it was in November, and I think there might have been some bad Singles Day sales or something like that. And then they came out with the restriction. They and
wasn't it a missing Jack Ma?
Yeah, we're still missing Jack Ma.
Did we ever find him?
Yeah,
he's supposedly in a ditch somewhere?
Been living. I think that he was living in Taiwan or living in Japan. One of those two. I saw some picture recently that said that he was over there for like 2 years. So
high note.
He's hanging out.
He's back in good with.
It's Jack Ma. He's rich. He doesn't need to be doing much.
No, that's the difference, Mitch. He's China rich versus North American rich. China rich, it's not good to be rich because they don't allow it over there. So you're never rich if you're really.
Enough of that, Con.
Okay. Sorry.
That.
Okay.
Marc, you would get mad at me. You'd say, "Don't say that." Pre-market high.
I know. I shouldn't say stuff like that.
Bilibili, right off that. Dennis, I want you to run a program where there's good news in China and what happens at 4 a.m. if that's the high or not, because you got a 4 a.m. pop, pre-market high 24.44.
Well, you know what? So Alpha was reading the $250 price target, not looking at the Hong Kong dollars. That's why. Yeah. I did it too.
I
So
know
all
one that
good.
did that also.
$250. Oh no, Hong Kong.
I said to you, man, I said to you, when you said that, I said, "Are you sure it's not 25?" And you're like, "No, it's
Joel and I were
250." But
confused. We're like, this can't be.
yeah, well, that's what makes a market. At least you
That
didn't
is
buy
exactly
the
what
top
makes the
there.
market.
That's what makes the algos got another one wrong. Let's just take a look at Baba real quick. I'm moving around today. It's at a nice. I mean, the percentage moves in these things are just unbelievable. Hey, for you Baba traders out there, I got a good level for you. Just based on the U.S. charts and the U.S. trading. Look at the there's a pair of highs at 92.75 if you get up there today. That splits your highs from Monday and Tuesday, 92.90 and 92.57. Your 2-day close, you're just not even there yet. That's 91.45.
I still hate these charts. I can't figure out a way to trade them
Because
with
they're
those
just
gaps.
gapping all over the
They're
place.
just,
Yeah.
I'll just be as honest as I can. I
Well, it
would want to
is.
join the party, but
They're hard to
when it's in the
trade,
intraday,
man.
it's sideways action.
Again, and I'm saying, you almost have to hedge China with China, like make a call on
Yeah.
a certain stock
Exactly.
because they all move together.
Mhm.
There is some pair trades opportunities, and I do pair trade China often. But again, the tape bombs, and people are saying, why do you like Baba? Why are you buying Baba? Okay, I've got to clarify here because people listen and they don't listen. I did not say I was buying Baba. Did I say I was buying Baba, Joel? I'm saying
No.
why people are buying Baba. That doesn't mean
Exactly.
Dennis
Huge
Dick is buying
difference.
Baba. I'm scared of China. I own no China. I sold more China. I had a China ETF. I actually sold some more of it yesterday because I'm just scared of the whole situation over there. So I am not coming in here and advocating that we need to buy Baba right now. I'm telling you why it's catching a bid. And I get that. But because I get that doesn't mean I'm executing and buying the stock here. So I want to clarify today, I am not buying Baba. So I have multiple people reaching out and like, yo, you like Baba now. No, I'm saying
the
why
bots,
it's getting
Dennis.
bought. It's got a low PE. That's
It's
why.
the vocal bots that are trying to, they're picking up on what you're saying and then they're running it through their systems and they're trying to clarify. Like if you say it 2 or 3 times that you're buying Baba, then that's a different buy signal if you just say that it has a low PE. So you got
I'm
to
just
watch out.
saying people are buying Baba because it has a low PE. People are scrambling. They're going. This is what is happening. It's not a coincidence. Like my job as a trader is to identify relationships. What I can tell you in the last month and a half is low
Longer.
PE stocks are all getting bought and high PE stocks are all getting sold relative to each other. Yes, we've had an overall market rally, but why is Goldman Sachs up $100 in the last month and a half? Well, the PE is 6. They're not. It's simple.
Dennis, I'm
Simon
sorry to
trading right
interrupt
now.
you, but we got Mr. Chaikin in the
Bring him
background.
in
And
for
we
this
don't
conversation because this conversation is very good for Mark
old school
as
like
well.
us. Bring Mark
Yeah.
in.
All right, let's get to Marc Chaikin and Chaikin Analytics.
I love the intro. They put him in the intro.
Well done, guys.
Got to bring him on with a little music,
This guy,
right?
suit and tie, is in that intro.
Yeah.
Mark always well dressed.
I'll have to.
He's a
have to-
suit. He's
have
a
to up
former
my
suit.
Thursday morning game.
Well, I'll tell you one thing. I read about a lot about Marc in my book, so shout out to you, Marc.
Are
You're a
you
lot in
studying
this
for
book.
this? You studying for the CMT?
Yes,
Oh,
Marc. I
good
read a
luck.
lot. So shout out to you, my friend. Definitely enjoy reading a lot about your indicators. If you guys have never Chaikined out, you get that one, Chaikined out?
Checking out.
Good one, man.
Okay.
Definitely check out the indicators that Marc Chaikin has brought for us, right? And I think a lot of that is behind Chaikin Analytics. But let's get towards the action. What are you seeing in this market right now with this pullback? Is this an opportunity for us, Marc?
Well, we've got the Fed coming up, and as I said to Joel yesterday, we won't know whether we're going to flop back down to 3,500 or get the market moving again up toward the resistance. But clearly, what people are getting so smart now, you go on the internet and you see posts and everybody is looking at the right things, but that doesn't mean they're going to be right. So everybody saw that trend line coming down off the highs, and the overbought levels that we achieved. And so we got a pullback almost too perfectly right off the high. It's the high that connects the January peak back in 2022. And so everybody's seen that. There's your trend line. And that's the fourth pullback from that trend line. It's perfect. It's almost too perfect. So we're now at a mini support level down at 3,900, 3,930, and we could get a bounce. Are you drawing automatic trend lines there, Dennis?
No, this is Mitch.
Hey,
Mitch, is this auto?
We're using the Mitch charts, and Mitch
I'm trying
is
to get
fast
my
on these trend
CMT,
lines.
Mark. Come on,
That's
I got
it.
this.
It's the course.
Yeah.
It's the course. It
this is
teaches
good.
you how to draw fast trend lines too.
Mark, what about maybe everything's all the bad news is factored in? I mean, this market is a discounting mechanism, correct? And it looks forward, and that the Fed is throwing everything but the kitchen sink at this economy. And everyone has been calling for a recession. It was supposed to be here by now, right? Wasn't the impending session supposed to, where they started raising rates earlier in the year? And there's still job openings. There's still a vibrant economy. People are still traveling. I mean, is the market looking beyond these Fed hikes and being the discounting money mechanism that it should be?
If it was, we'd be above 43.85 and off and running, but it isn't, Joel. What we've got is a lot of hopium, but people are hoping for the wrong thing. There's a pattern that I think I've talked about, but if not, this is probably the four most costly words in an investor's vocabulary. This time is different. It's not going to be different, guys. The no bear market since 1955 has ended until the Fed has cut rates. So people are hoping for a pause. Forget about it.
Oh, but they redefined pivot in the media. A pivot now is just the simple of slowing the rate hikes. That's what they're calling it right now.
Well, that's hoping. That's hoping that that's going to end it, but it doesn't. You go back to every bear market and every recession, they're tied together with bear markets, and they bottom out after the Fed lowers rates, not before.
I'm with you, Mark. What do you think, though? Why? We've bought a lot of stocks here up to all-time highs here now. And we were just talking the low PE trade ahead of, right before he got on. And, I've been isolating this for the last month. Low PE stocks are getting bought like crazy, and high PE stocks are not getting bought or even sold. So, does this trade continue, or can these low PE stocks work even if we go into a recession? So I'll give you some example, like Deere had an all-time high.
Yep.
Is this just hopium, or is this Deere works even in a recession? I'm asking you because
this is the dilemma that investors are faced with right now. I think for a parallel in terms of what we're seeing now, not where we're going to be, it's 2000 to 2002, where the small cap stocks went into their own bull market, rallied 40%, while the tech bubble, the internet bubble, was unwinding. So we're not quite seeing that now. In fact, that index is lagging. If I saw the IWM break through a previous peak, I'd be more bullish. But to do that, you'd have to get through resistance in the S&P. So yeah, there are pockets of stocks. When we talked about China 2 weeks ago, a day after Thanksgiving, you asked me what the power gauge was saying, and it was bullish on JD.com. It was bullish on Alibaba, but I pointed out PDD. And look what PDD has done with a bullish power gauge. And that's been outperforming the market. So, there are some massive moves here. I'd be fading the moves because whether it's China or the US, first quarter, you're going to get some very down revisions for earnings going into 2023. And you're going to get a lot of negative company forecasts. So I think the market can rally into year end. I think it's going to have a real hard time getting above 4,200. And I think whatever the ultimate low will be, whether you believe Goldman Sachs and or Wilson at Morgan Stanley, that it's going to be in the low 3,000s, or whether you think we're just going to test the bottom, there's plenty of downside risk here.
I mean, that's what it is. That's what the market comes back to. It's all risk reward. And this is why I've raised cash up too, because, you know, if I do miss the boat, I mean, at least I'm getting some money in my cash, but I'm like, it's just so much risk out here. I mean, I just don't see like this nice favorable environment. You know, we went from like 1% interest rates to 4.5, going to 5. I mean, it just doesn't seem like the favorable environment anymore. And, you know, who says that the market has to come back next year? Everybody keeps posting. I see this everywhere. Oh, the average bear market is 18 months. So people are saying, well, we're already a year into this. We know we're going to make new highs in 6 months. I mean, is that thinking, you know, I think a bear market, you know, doesn't have to just end in 18 months here, Mark.
Well, you're right, but arguably the bear market's been going on since February of 2021 when the tech stocks and Cathie Woods peaked.
So that means we should be right now making new highs, and maybe in some stocks we are.
Well, not necessarily making new highs, but breaking out of bases, which is actually what's happening. I mean, there are so many cup and handle patterns that are very bullish here. It's a difficult market for investors. That's why you have to fall back on patterns like what does the Fed do to stop a bear market, you know, or help end a bear market. I mean, clearly the Fed started this bear market in March when they started tightening in a big way of 2022. So, you know, that's when you really got the 20% drop in the S&P.
What about this TLT rally, Mark? Yeah. What's this telling you? The rally in the TLT. Look at that rally from 92 to 110.
It's telling you that the bond market believes there's a big recession coming because they're buying the longer end more comfortably than they are the short end.
The shorter end?
The risk is. Okay. So, you know, people who want to own bonds are buying the long end now. They're not being seduced by the yield curve and the attractive short-term rates because they're nervous and they, you know, for many people, if you have a choice between the long bond market and stocks here, they view, in Dennis's terms, much more risk in the stock market.
So what bottoms first in this type of market? Is it going to be the bonds or is it going to be the equities?
Bonds.
Bonds for sure. Yep.
Have the bonds bottomed?
Looks that way.
I mean, so
the long bond, short rates can still go up depending on how high the terminal rate is from the Fed.
I mean, there could be a big bull market that we're just missing coming for the bond market as well. Like you start thinking about, you know, if we stop raising rates here, if we just don't even like not necessarily pivot where they're lowering rates, but if we just stop, the bonds maybe can rally in that. I don't know if the equities, like I think if interest rates stay up for the foreseeable future, equities are really going to not just take off.
The hit.
They need an actual, like they'll need eventually to start to decline in rates, but bonds maybe don't. Maybe we should be buying bonds.
Well, then you guys are out of business because you can buy the
because I'm an equity trader.
You can buy the TLT and go to bed. No,
Mark, you make historical references, right? And you know, probably about as many as I can make. I just like to look at things in the perspective of, you know, where the market was in 2019, what happened in 2020. The ridiculousness of 2021, the back to reality in 2022. I mean, is there really a playbook for what has gone on? War in Ukraine, China tension? I mean, there's always been geopolitical concerns, but going back, I mean, maybe the Fed would have started raising, you know, let's say we didn't have the pandemic, instead of just flooding, you know, the economy and people with money handing out $1,000 checks to everyone but me and Dennis. You know, what if scenario? Maybe there's just an equilibrium here. And I don't, as far as rates going back down, I think Dennis's scenario of them just flattening is more, but like in my opinion, we're never going back down to those rates that we had before. It was too dangerous of a thing, and it was just because of what happened with the pandemic.
Basically zero.
All right, team, just give me a second here. I don't want to interrupt you, Mark, as more long economic data is about to hit, so I just want to make sure that our traders are aware of it. Don't get caught by surprise here.
6150.
You get initial jobless claims that are coming out, continuous jobless claims. 1.6 million is the estimate for jobless claims 4-week, 228,750. Initial jobless claims estimate at 230,000, prior 225,000. I'll see how we're hitting the tape here. Just wanted to make sure that you guys are aware. Don't want to catch anybody.
Yeah,
by surprise.
6150 is the high in the D's. So if you get to 6150, you got a little air pocket. Right now, that initial pop did not get us there. That's 5975. So keep an eye on that. This is called 3960. I'm sorry, Mark. We wanted to get that data
not at all.
in
That's
there.
important stuff.
Yeah,
for
initial
traders.
jobless claims coming in right in line, 230 versus 230. Continuous jobless claims at 1.671 versus 1.6. So that's at least a good outlook there. Doesn't seem bad. Inline numbers and the slight hotter on continuing jobless claims. Let's continue with the interview.
Yeah, so there are some things, might as well revisit my bullish call on energy stocks. That market has taken a huge hit, and there's still potential, I think, for crude oil to rally, but it's certainly looking like a stale trade right now.
Did you buy the pullback in energy stocks? I mean, ExxonMobil's down $10 in a week. Would you be buying these, or is it like, let's just wait and see until the CPI data comes? What would you be doing, Mark?
Selectively now, Oxy, which had been my favorite last year, saw the power gauge turn bearish, so I don't want to go into Oxy. But there are a couple of stocks that have maintained bullish ratings. Valero is one of them. I love Dino, the old dinosaur Sinclair. It's had a big spike down here in the last 2 days or last week or so,
Wow.
but it's maintaining the uptrend. So I think selectively you can buy the energy stocks here. You know, this is part of that formulaic trade. When China is weak, the energy stocks have been selling off. And so you've got two things. You've got the weak dollar and you've got the China macroeconomic situation weighing on traders. I mean, you know, again, does this really affect the fundamentals? No, but it affects the psychology of the big traders, and there's no market that's more driven than the energy market by big traders and big trader psychology. But you know, what's interesting is, and that's what is, you know, that's what's right and that's what's wrong with the market. Energy, natural gas stocks really haven't been affected fundamentally by changes in the strategic oil reserve and so forth. We're exporting natural gas to Europe. That was on the tape yesterday, and yet the EQT is down almost as much as, but not quite, as Dino. And EQT would be my one stock to buy on weakness. It's the largest natural gas producer in America. We've mentioned it many times on the show. It's just a terrific company, and if natural gas averages $5 what they call an MMB for the next 5 years, they'll generate $21 billion in free cash flow, and the market cap is less than $20 billion.
This has come off significantly from the highs to 51.97 down to 36. I mean, you do a fun 50% retracement, you know, and you're right in there right now.
Yeah,
so
I think this would be the one energy stock I'd be buying here because it's natural gas. Europe needs natural gas. Russia's not going to provide it.
Call.
They're the biggest producer in America. And, you know, at some point, the environment's going to get more friendly for pipelines and drilling. It has to. Otherwise, we've lost our energy independence. And that's, if there's one failing of the Biden administration, and I think there's a lot of good that they're doing in terms of calming down the shrill, it's that they just haven't pivoted on our energy policy. They've gone in the wrong direction, in my view. And if we get a more friendly Washington toward energy, and we have to, otherwise, you know, we're going to be waiting until our grandkids are in college for solar to take over and EVs. So we really need to amp up our pipeline construction, and you know how hard it is to get a pipeline built if you're Canadian, Dennis, right?
Ha.
That pipeline from Canada has been, how long has that been delayed? 20 years?
Hey,
crazy.
Mark, before we let you go, just on the inflation picture, which has been, the bugaboo for the market. I mean, of course, the readings are taken. Crude was in the 80s. We theorized, but man, I'm looking at some of these commodity charts and this big boom and 120 crude and $15 natural gas and beans at $20. Now the beans are holding up okay. But if you look at the commodity trade overall, I mean, it's come off quite a bit. So, do you think pumping power's looking a little bit forward? And, maybe we had, I mean, is there any chance that we've seen that just based on the commodity prices? I mean, it still takes a while to filter down to the consumer, but a lot of these just come on the commodity prices coming in.
Well, housing and, as you know, housing and food are really the two biggest components that affect the consumer directly. The others are supply chain pipeline kind of issues. I'll go back to the fact that we've seen an interest rate inflation bear market. In other words, the Fed felt they had to do something about inflation, and that was both hurting the consumer in their pocketbooks and then ultimately in what they had to pay for a mortgage. So that's phase one of the bear market. Phase two is the earnings recession. And we haven't seen that yet. We just haven't seen it. So yeah, commodity prices are a good thing, dropping like they are. I'll tell you this, you go out to buy cedar for siding because we're shoring up our barn. And even though lumber prices have plummeted, you're paying
They don't come down
3 or 4 times for cedar shakes, what you used to be paying, or even
Yeah.
2x4s. Or
Doesn't
2x7s.
show up. Doesn't show up at Home Depot.
Yeah, that's for sure. The contractors are still complaining, and it's tough. But I think you don't want to overthink this market. Respect the chart patterns. You've had a lot of bases and the breakouts, but also don't be greedy. You've got some upside resistance trend lines in all the stocks you looked at today. So if you're buying them right, sell the trend lines, sell the fib retracements.
the 50. We almost got to the 50 there.
Yeah.
All right.
There we go. I mean, this is more upbeat than I have been, only because we haven't broken down yet, but it's a big yet. I think the bottom is probably going to be made in February.
All right. Well, thank you, like always, joining us, Marc Chaikin. And definitely, guys, check out Chaikin Analytics if you haven't done so before. Have a good one, Marc.
You too. Be well.
Take care.
All right, we made
right.
quick work of well, not quick work yet. 6150. That was the high from yesterday. We sold off very high from that level and came down, and that was even a SPY level too, because that happened during the regular session. Up 26, 27 handles, just climbing the wall of worry here after the 4-day decline. I'm trying to pull up my levels here to see what's next, but market, couple lows in the same area, battling back. We'll see what happens when the real liquidity comes in. Dennis, what do you see him moving out there?
Everything is up. It's an everything rally. Just looking across the board, the only stock in the red, major that I see is Tesla.
Let's talk Tesla.
Multiple news headlines coming from Tesla here. One obviously from last night with potential. They were talking with Twitter, and I'm butchering it because I don't have
I got
it
you.
in front
No
of me.
worries, Dennis.
Oh, Mitch, bring it up here. You're the news
All right.
guy.
So Elon Musk's bankers are considering Tesla margin loans to cut risky Twitter debt. So Twitter's facing about $1.2 billion in annual interest costs. Margin loans are one of the several options that are being considered to ease the burden. And another report also from Bloomberg stating that Tesla has shortened shifts at the Shanghai factory and postponed hiring push.
We're right near the lows of the move.
Yeah.
It's one stock that really hasn't participated in the recent rally. And I'm going to say the Twitter concerns, we've talked Tesla a lot on this show. The Twitter concerns are definitely a concern. But the other thing is just multiple contraction happening here. Where this scenario where we can buy stocks trading 100 times earnings or 80 times earnings or 70 times earnings is gone. They're bringing it down to a reasonable multiple. At a certain point in time, Tesla's going to be a buy. gets down to maybe 30 times earnings. And people say, oh, Ford, it's 37 here now, or 38 or 40. Yeah, but we're also inflated. These earnings, and that's one thing that people don't consider when they're looking at the markets, is we've had a really rosy environment here for a lot of these earnings. And I'm not saying the earnings are going to come down, but I don't know if they're going to grow at what we expect them to grow. So I don't know if you can look at those forward multiples and say, oh yeah, here we are, it's cheap enough, because I think those forward multiples might be wrong on the E.
It's something that I was just concerned about. I don't need to be concerned about Elon Musk. I mean, putting his stock in the hands of Wall Street at an elevated price like that, it just didn't make any sense to me. I mean, he just would have been better off plus overpaying for Twitter. Based on where the multiples were trading. I mean, it's like a perfect. He would have just been better off selling all the Tesla stock he could, paying cash, and I mean, he had the cash to do it, right? I mean, the guy's worth a couple $100 billion. I mean, just putting your stock in the hands of Wall Street. I mean, it just doesn't make any sense to me. Tesla's been hit over the last couple days. It gave it back. The low of the move comes in, I believe it's 166.19, and the closing low is 167.87. So that's where you found interest before. I don't know if you got quite that low in the pre-market, but man, I mean, he's using his stock, and really, frankly, I think it's being used against him at this point. You do have a firm buyer here under 170. Oh, right, well, we're right there right now. Or no, 172.30. Last few dips at 170. You found a buyer, maybe someone that's long the puts or something. 175 puts to trying to lock in some profits or something.
it's been
Pre-market
leading
low
the charge.
170.11.
Leading the charge on the way down, doesn't rally when the market rallies. And, usually it's those
True.
stocks that, when the market goes to turn, that'll be your leader on the downside. So you look for leadership. This is the leadership for the bears. So I don't know, maybe this is going to be a headline that turns Tesla around, but there's nothing in the technicals that look good here. And when I look at the fundamentals, I see an expensive stock.
All right, let's
Dennis,
keep going.
I love well, one last thing, keeping a track of like the top components. This puppy's slipping, Dennis. I mean, it was Tesla was really working its way up the ladder. It got ahead of Brick B. It got a hold of got ahead of United Healthcare.
It got
really
stupid.
very
Just
yeah.
stupid.
And now it's really coming in. It's really coming. Hey, nice, Mitch. I like that. You're getting an A for today. But it's slipping, man. It's like Meta.
fast.
Meta used to be
Mitch.
5-6. Meta's gone. But it's slipping. That market cap is really slipping, and it's not moving with the S&Ps. That was the thing that really helped it out before. When the S&Ps were ripping, Tesla was ripping.
Oh, yeah.
Now you get some. It's just not getting moved along when the S&Ps move, and that was a big factor in the in 21 the stock splits were going to 5,000, and they would carry it around. Now there's just too much baggage, and it's just not participating in those rallies. So now that I said all those bearish things, it will probably be back over 200.
It's oversold. So it is oversold. That's a one.
I was actually looking at that, Dennis. In your mentality from where it's being sold, it is oversold. But technically wise, I'll tell you, at least from my technicals, it's not oversold.
It's not even oversold. If you go out and look at those monthly,
it still
charts,
has room to go. It's at 42 on the daily.
Look at the monthly chart.
Oh, that's scary. Oh man.
Yeah, the monthly charts.
I see an ugly head and shoulders here again. Again, not a pattern trader, but you see the
How
head
many
and
months
shoulders.
do you
Oh
have there?
man, we broke the neckline. Doesn't that mean broken neck? You don't buy it. I don't know.
Yeah.
You technical guys tell me, but that 200 was the neckline. Looks like it's breaking down from there too. I just not the stock to be in a rising interest rate environment. Maybe when the Fed pivots, maybe you know what? Well, the only turn of this around is if the CPI comes in light next week. Then they'll buy stocks like Tesla. So it's dependent on the CPI. CPI hot, Tesla's murdered. CPI not. So it means the number comes in light again. They're like, we've beaten inflation. They're going to buy all this stuff. So wait until the number. I think you got to wait till you know the number, and you got to be fast.
All right, let's go to the Gamestop, or maybe just stop buying, because it doesn't seem like anyone, at least I don't think I would touch GameStop. But let's get towards those earnings. EPS at a loss of 31 cents. missing the loss of 28-cent estimate. Sales at 1.19 billion, missed the 1.35 billion estimate. Despite earnings miss, revenues miss, and absent guidance, looks like some people give it some love after hours yesterday. I've been watching this daily chart, and it just looks atrocious to me. So
I've learned the hard way that I can't say negative things about AMC, GameStop, or Bitcoin because I'll get 500 people reaching out ready to kill me. So I'm not going to say anything about it. You know, it wouldn't have been nice.
Don't worry. Was that Money Mitch, BZ? You guys can hit me up. I'll see you guys a little later.
You want the 500 hate mail? 500 people? We're coming to get you.
Come get me.
Went on that Bitcoin thing. Was it Bitcoin? What was the thing? And then the one thing was looking up the office in Vegas, and they were trying to come and get me.
Dennis, let's not bring.
They thought I was in Vegas.
Okay. Yeah,
what was that? What was it? Was on Reddit. But what stock was
you
it?
You went on a rut, Dennis. If you want to remind people,
they were coming to get me.
You went on Russian TV. You went on Russian TV, Dennis. Is what you did. Was it on Russian
TV?
Yeah, in the middle of.
I don't even know what they said.
I can't remember, but
they're mad.
When you told me you were going on that, I'm like, oh my gosh, he is going to get absolutely blitzed.
They were very mad at me.
Yeah, yeah. All right, you know what? Every trade has an out, right? And I'm not going to give a bullish out, a bearish rant, or anything. I'm just saying, with all the splits and everything, I'm looking at this 1950 area, a monthly low at 1940. Another monthly low at 1944. If you're buying it at 2250, that's your risk. That's where it is on the monthlies. After that, it's going to $10. And they split this thing, so it's like
don't say $10 at GameStop. You'll get that hate mail.
No, I'm saying that's the next monthly low. I'm only giving statistical information. I'm not giving opinionated information. They'll turn it though and say
you said negative about our stock.
I said buy it at 22.5 and stop yourself out at 19.5.
The best GameStop trader, and this is the backstory here, was you bought that GameStop at what, like $6 or $7, and you wrote it to 350. You were the GameStop master. You may have traded GameStop better than any other person on the face.
I can't take credit for it. It was my nephew Hayden, and
he was reading the Reddit board.
Yeah. Yeah, exactly. And the only thing that I did was get us out because I was so sick of talking about it on the show. And I didn't want to say that I owned the stock. And
where did you end up selling?
350.11.
Oh my gosh.
But I don't even know what the split. But here's the
where did you buy it?
I think it was single digits. It was Lisa. It was Lisa.
Yeah,
but
like
it wasn't a big
bagger.
position. It was a small position. I think Luke did better than me. Luke sold a 420. But the story is that Lisa's home on Wednesdays. And this thing was just going absolutely crazy. And I'm just like, I begged her. I said, we don't sell much. Let's get out on the close, on Wednesday. And she said, okay. So we sold it. The close was like 350.11. I pick up my phone in the morning and the thing's at like 435. And I'm like, oh man, what a horrible sale. And then and then that was really the closing high. You know how I like to focus on the closing high, but it was a small position. It was very lucky. And it was my nephew's call. So there you go.
Nephew.
Yeah, good call. Good call. I'd hated, but okay, Mitch, rein us in. All right.
Yeah, last thing I just want to mention with that GME, and we'll move forward, is this date, the 31st, was the day that they brought out their NFT marketplace. As you can see, it has gotten no love. Was that a fake site or
what? Did we ever get to the bottom of that? We thought it was a fake site.
No, I think it was real.
No, they got a real one.
Cheesy that we thought it was fake.
Yeah, and another thing is they launched it very late, right? That just goes to show you when you're late to the party, well, you're not going to get what everybody else got. And so GME did get that volume lift that one day, but quickly right back down below. All right, moving forward from GME, let's get out of that. We'll see what happens.
What a loving chat they're talking about.
They love us.
Of course.
80% of the people, I think, love us. The other 20 hate us.
I mean, welcome to life, guys.
Let's get rid of that 20%.
It's impossible.
Oh, yeah, I'll tell you that. It's impossible.
Because I say something, then the 80 become the 20. So it's slowly.
It's like, did you guys go to school?
Now
everyone
80,
loved
20.
you in school?
They hate me more.
Did everyone love
pretty
you in
much.
school? No, I mean maybe Joel, maybe, but
No, yeah,
I had
everyone
like
loved
20%
Joel.
that hated
Everyone
me.
likes Joel.
I had-
I'm
I
too
had-
opinionated. Half the people hated me.
Exactly.
I
I'm
had
the
some
most
pretty
right.
big
opinionated
friends.
Canadian out there.
All right, let's go.
Canadians
Come
are
on,
supposed
Mitch.
to be
Who
nice.
cares
We're
about high
going
school?
ExxonMobil. Let's go
Let's
to
go. Let's go.
ExxonMobil and the oil stocks as they're announcing a new corporate plan for the next 5 years. Looks like I know that we were starting to see oil turn around. This could have been where it starts shaking back, but let's get towards what they said. ExxonMobil expects $17 billion for lower emission initiatives through 2027, an increase of nearly 15%, expecting annual capital investments to remain at $20 billion to $25 billion. Also announcing a share repurchase program expanded up to $50 billion through 2024, including $15 billion in 2022. This wasn't the only oil stock that announced some news. I'm going to combine it so that we can talk about both of them here. Okay. Chevron also announcing 2023 capital expenditure budgets. So that's CVX, of course. Organic CapEx of $14 billion, affiliate CapEx of $3 billion, including $2 billion of lower carbon CapEx. They stated that we're maintaining capital discipline while investing to grow both traditional and new energy supplies.
You have cash cow companies and cash burn companies. These companies are going to have good news coming because there's so much money they don't know what the hell to do with it. And then you have the Carvanas of the world that have no money and they're just burning and they're eventually a lot of trouble. I'd say, you invest in the companies that are actually, doing well. Now, with that being said, I still need a pullback in energy to get in. We've had a little bit of a pullback. Recession hits, they are cyclical earnings, but there's still underneath demand in all these stocks.
There is, and I love this chart here on the ExxonMobil. I probably was horrible talking about it in October, mid-October, all the way up to the all-time high. Trying to find a triple top or something. But the period from last week, the 1, 2, 3, 4, 5 days of consolidation between 109.50 and 112. That was huge, right? Oil cracked, that cracked. You had a couple down days. Now, what I'd be looking for, and you guys are talking about support and buying it. What I'm looking at is, is this, if this was the dip to buy, you put in a little double bottom here, and then you'll rally back and you'll try and take back half of this move. And there's some overhead supply. There's some people here like I miss 110. I'm coming down to 108, or I'm coming down to 107. I mean, because it's been such a big run. But if we look at the all-time high was made at 114 and a half. We've had about, let's see, a 10, 12-point move, 6. So get back to that 107 and a half, 108 area, get half of that move back, and then all those old lows will be forming resistance too. So trading above yesterday's high by a good margin. So you even may get back half of that move today. I'd figure out that exact number. Keep an eye on it. Kind of same scenario with CVX wasn't as clean. It did have the consolidation. That turned up yesterday. That'd be the same thing. I'd be looking at the 180 here on a pop. That'd be just about halfway back from 190 to 170.
All right, let's get out of the oil stocks. Let's keep this moving. We're getting some good motion here. Let's go to C3 AI. As they reported their earnings, I'll give you guys the numbers here. They reported EPS loss of 11 cents, beat the 16-cent loss estimate. Sales at 62.41 million, beat the 60.86 million estimate. They do see Q3 23 revenue at 63 million to 65 million versus the 66.79 million estimate. So lowering their Q3 23 revenue outlook, and see fiscal year 23 revenue also below at 255 million to 270 million versus a 260 overall fiscal 23 revenue.
They ripped this up to 13 and a half last night. When these cash burn companies
right there, that wick.
When these cash burn companies rip up 10, 12% on a beat but they're still losing money, you sell them. So it was an opportunity last night to sell them. I have no interest in buying the stock whatsoever. Stop buying stocks that lose money.
Oh, Dennis.
Kramer's right. He's wrong about a lot of stuff, but he's right. Buying stocks that lose money has been just a losing way. in 2022. People keep buying these stocks that are burning cash because they think they're coming back, and they're not coming back. They had good stories. They were fun. Yeah, it was fun when AI was $176 a share in the end of, at the biggest tech bubble. It was bigger than the tech bubble of 2001. And now it's $11. Stocks go from 170 to 11. They usually continue to go lower.
Mitch, could you make that daily chart a little bit bigger here for our listening audience? Because someone asked about this on at the close, and I went low, like the old time low that could be possible support. The old time low 1129, pre-market low comes in, or was it after hours low? How low did you get? You got to 1137, but look at the highs. Three highs at the 1350 area, right there, three highs in a row, a triple top, and they blasted over $2 into that area. You went just a tad to even get above it. 1352 is the high, or almost 1360. 1360 is the high, and then you pull back.
1360.
So if you are like messing with these things after hours, you get a pop like that, go to your dailies and try and find a corresponding point, because that would have been an excellent one. Now, I don't even know. I mean, needs to get green and stay green, and maybe it has a chance to rally. Actually, if you're looking for a shorter top, if it could actually clear 1250, there's a chance of a rally. But that's the highest from the last two sessions.
All right, let's keep going. We'll go to Ciena, Q4 EPS here at 61 cents. That's CIEN. Q4 EPS at 61 cents may not compare to the 8-cent estimate. Sales at 971 million, beat the 849.88 million estimate. Big lift here. Of course, we just talked about that EPS coming in way off the estimate there. That might have helped it, but big push here.
Value tech blows earnings away, made a lot more money than obviously they expected to make. So that's the reason. It's easier stocks to short, I'll say that. But, I don't want to buy anything that's up 17%, so I'm just laying off this one.
Yeah, I don't know.
Tough
if
stock.
you get back up to the pre-market high, I mean, that'd be some heavy lifting. I would just keep that as a target. 53.49. What do you got on the dailies? I mean, you're filling a gap at 50. I would, the way we pulled back from here, if I wanted to try and sell this thing, if I was long, I'd be out there at like 52. There was a pair of highs just over 52. So big move for Ciena. Decent value, but boy, got overdone there.
We'll see what happens on this one. Nice little push. I like the monthly chart on this one. If you're thinking about longer term, 40 seems to be a good support. Let's move towards Disney. What about Disney? Add support. Should everyone just go out and get Walt Disney today? Well, the truth is, if you would have got it just yesterday, you would have got it at a discount. So that's another thing to keep in mind, right? When these price increases are coming, keep in mind there's ways to get around them. But Disney will debut its new ad-supported tier today that will cost $7.99. The existing ad-free plan will be increased from $7.99 now to $10.99. So if you would have got it yesterday, you could have got that ad-free instead of looking at ads today. But just mentioning that and how timing is everything.
It is, and you're at that huge support, the 90 support that obviously did breach in November. We've pulled back and given back the entire move from where obviously we got the Iger news. So again, you don't have to chase in this market. It always seems to give you a second chance on the long side. I have a small half-size position in Disney. I want to add to it. The recession worries of next year are keeping me from adding to it.
Boy, oh boy, this is a tough one. You got to pop. I'll just give you your pre-market high at 93. What do you have on the dailies? Got a high at 92.79. So if you get a strong 93 bid, the way the SPOOs are moving here, you might get a rally. I don't know if you're going to see your 2-day high at 96, but that's a good level. Maybe that'd be $3 rally. Maybe not today, maybe tomorrow if it has a couple good days. Your 3-day close at 95.93. I just want to digress here for 1 second, and I very
all
rarely
means.
talk sports, but someone asked a sports question. And Dennis, I know you don't follow sports that much. Okay, I mean I know you do, but you don't follow like the gambling, right? Do you know the Lions are playing the Vikings this week?
Yeah, what's the
And
line?
what do you think the line is? It's in Detroit.
I have
The
no
Vikings are
idea.
10-2.
Just put
The
it this
number
way.
one-
I'm taking the against the Lions.
I'm taking against the Lions too. I don't know what the line is, but
Take a
I'm
guess.
not going
Just
with the
take a
Lion.
guess. A 5-7 Lions
Plus
at
100.
home against 10-2 Minnesota. What do you think the line is?
Plus 115.
No. Not the money line, Mitch. Not the money.
Oh, the
Yep. Don't say
spread?
anything, Mitch. Yeah. Just don't look it up, Dennis. I see you looking at your computer.
what's the spread?
Just take a guess. The Lions, the 5-7 Lions
I have
at
no idea.
home versus the. I'm like lobbing it.
There's
up
like
as
zero chance they can win that game.
There's zero chance they're going to
There's
win.
like zero
Okay, you guys
chance they
heard
can
it
win that
first.
game.
That's not investment advice. That's sport. What do you think the spread is? Guess.
I don't know.
How many points do you think the Lions are getting?
The Lions sometimes get
10.
0, they sometimes get 40. So you don't know with the Lions.
No, how
But
many points? This is a Dennis. This is not
They're going to
cost you.
lose by at least 2 touchdowns.
Okay, so he's saying 14. Plus
You're
14.
saying
Plus
plus
14.
plus 14.
Yeah, they're giving. He said 14.
Okay.
2
The
touchdowns.
Lion. Are you ready, Dennis?
What is
The
it?
Lions are favored by 2.5.
The Lions are favored.
By
To
2.5.
win.
I'll tell you
Is
right
somebody
now.
injured
I'm taking
on
that to
Minnesota?
Vegas
Stop.
right
Is
now.
somebody injured on Minnesota?
Nope.
Because that would make a difference.
The Lions are way better than
Me,
their
me
record.
and Mitch are actually going to right now. We're gonna mortgage our house and we're going to bet on Minnesota. How in the hell the Lions are way better
This is
than
what
record?
I'm
all
just-
the,
That's
this
what they
is all-
say every year.
Yeah, the Detroit says this
Like,
Oh
every
wait,
year,
I gotta
man.
go.
Every
I gotta
year.
go on that note.
I'm
you
a
guys-
Lions fan.
At the
The
close
Lions are
will
favored.
be.
Are you right, Joel? Are
Okay.
you right? The Lions are favored to
This
win
is what
that game.
happens, Joel. You wanted to digress.
I'm sorry, and now I look. It's 9:01. Pre-market.
I think you're wrong. There's no way the
Okay,
Lions
you
are
want to
favored
bet
win that game.
100 stake? You want to bet your house against my house? The Lions are favored. I'll bet you $1 million, $2 million, dude, $5 million, $10 million.
Joel, I got a house down here. You can
Call
take it. I'll
arbitrage.
take yours.
It's got the
All
number
right,
in front of
listen.
them.
Pre-market prep at the close. Benzinga is doing some kind of Benzinga thing. So go to premarketprep.com. I'll get it set up and tweet a little bit earlier. Dennis, it's a Thursday. You think you could come by for a few minutes?
Maybe.
Okay, I'll send you the link. Okay,
Send me the link.
everyone. Talk to you
I'll
later.
try to come by.
Yeah, that
The
was a
Lions
fun
are
one
seriously
there.
favored to win that game.
Yeah, I don't know. I don't know what's going on in Vegas if they're trying to play games on you, but yeah, I guess they're favored
They
to
like
win
to
that
give me
game.
gifts every once in a while.
You got to remember, right? The Vikings have lost what, 2 games all season?
Yeah.
I don't understand how this
I
team is.
agree that the Lions have actually played pretty good. I feel like they are better than the record of 5-7, but this was supposed to be a year that we were going to challenge for the playoffs. And, you know, the same thing happens every year. If you're a Lions fan, the same thing happens every year. We get the hype. We get like, yep, it's different this year. This team is better. We're going to at least go 500. And then, you know, and sometimes we win the first game or, you know, we're like 3-1 out the gate. We're like, this is our year, man. And then they always go on their 5-game losing streak, which they have every single season. And the season is pooch. That's what happens with the Lions. It's what happened again this year too, pretty much. So are they better than the record? Maybe, but, you know, it's the same thing every time. So you can never get on the Lions bandwagon because it's a sad bandwagon to be on.
Yeah, I mean,
Bad
at least they
teams
have good
find a way to
following.
lose.
At least they have good following. I'll give them that at least. I won't hit them too hard. We'll wait till Monday to hit them a little harder. But have a good one, Dennis. Go do what you do best, my friend. Go trade. I'll definitely see you tomorrow. All right, let's keep going after it. Team, what's coming up next? Come over now. Join us on the Benzinga FinTech Awards. Come out, team. We got a great day. It's the FinTech Deal Day. What's going to happen? Well, Right now, they're already going on and how leaders can make fintech more exclusive. At 9:15, we'll get regulation, the problem, solution, ensuring a balance. Come over, team. Check out what we got for you today. And I will see you guys a little bit later. Like always, hit the thumbs up. And I'll join you guys like always. I'll be in the chat. You guys want to chat in there? Talk about stocks also while the FinTech deal day is going on. Come join the stream. I'll see you guys over there.